Good afternoon, good morning, good evening to all of you. We are in the second day already. I hope that yesterday you had fun with all the booths and the discussion that we have had in the first white paper that we are what was released about automobility. Today we'll be talking about a different sector, which is extremely important. You know that in a few years we'll be 9 billion people. So you have 700 million consumers in India, 700 million consumers in Asia Pacific, in South Asia, and then you have the same in China. We have roughly around, we'll be having over 500 million consumers in Africa, plus the old ones, in Europe and in the US. So we have a lot of people who need a lot of energy. I hope you have a lot of energy, because today we'll be talking about oil and energy. And oil and energy is extremely important because what energizes us is what gives us strength, and what energizes everything that surrounds us is what makes us more efficient as a world, as platforms of production. And we'll not be just talking about fossil fuels, we'll also be talking about renewable energy and all types of new inventions that are being put into motion so that we can all have a fair share of our energy that we need in order for us to be able to move. So we'll be concentrating on the Middle East and Africa region because that's the one that counts for us, Lions and Falcons of DHL. And to that purpose, we have invited Abhay Bhargava. He comes from Frost & Sullivan. He'll be talking about key trends. But we also have a brother from Germany, Michael Wiedemann, who is our global president for oil and energy, who will also be talking about the DHL perspective on how this segment and sector is developing. I hope you'll have a lot of fun and that after your Q&As, you'll go out with a lot of energy. Wish you fun. Thank you. Take care.
Hello, everyone. I'm Abhay Bhargava, and it's a pleasure to be talking to you today on a very pertinent and relevant topic on the status and trends relating to the oil and gas industry in the Middle East. I represent Frost & Sullivan as the head of the industrial practice, managing this for the last 12 years, analyzing this market. So it's a pleasure to be here talking to all of you. Now, the Middle East itself, I mentioned, it's a pertinent topic to be talking to you about this here because the Middle East is the largest zone as far as the oil and gas industry goes. So let me jump into sharing the agenda here. We'll quickly talk you through about how we see the global scenario panning out, what's happening therefore or thereon in the region itself, what are the key trends and things to watch out for, to look out for, and what are the conclusions moving ahead. Diving into the global scenario itself, it's an interesting reshaping that's happening across the world in terms of the oil industry. You take a look at the chart there, and it's fairly interesting and representative because what we're seeing here is that the price of oil has actually stayed pretty stable. It's seesawed, but it's kind of just stayed in a very stable zone. OPEC became OPEC Plus, and that gave this industry a makeover, in our opinion. The US became one of the largest producers in the world. And the oil market itself has become less immune less volatile, and and is not sharply reacting to Middle East oil pressures. So anyone who's seen this market in the past would probably just agree that this is a sizable makeover that has happened. Again, demand supply dynamics have moved around. We take a look at Russia, we take a look at Saudi Arabia, and things have really changed as far as the demand and supply curves go. With that perspective, we wanted to show another thought here. We talked briefly about the oil prices, and you take a look at Brent over here. And it's fairly plateaued at about the $40 to $45 range, and that's probably where one could expect things to move, even looking forward. But from that perspective, it's the prices are a function of demand and supply, and on just that point of view, the crude oil supply itself has been in almost what we could call a state of excess. The strategic reserves and land stocks worldwide have been full, have been at capacity. I mean, that resulted in most of you hearing about how crude oil reached negative mark. No, people weren't giving crude away. It was just that there were no areas to stock crude anymore. At the same time, there's been subdued demand, and I think that's been one of the most critical influencers for oil as we look at it today. While on one side, stockpiles have been increasing, COVID-19 has resulted in demand dropping by almost 30%, and some of the aspects are near permanent. So we don't expect things to recover significantly moving forward. Speaking of recovery, what we could expect is that pre-COVID levels could be reached by 2022. Earlier, if things, vaccines come out, things recover perfectly. But on a reasonable level, one could look at 2022. But at the same time, the world of oil is not going to be coming down to a hard stop. The fundamental contributor to the economy and Middle East exporters, in our opinion, are expected to accelerate their downstream diversification. They're going to leverage the cheap feedstock that they have and become really competitive in the global downstream and refined products, petrochemicals market. Again, looking at it from the demand and supply point of view, I think it's really important to consider the OPEC and non-OPEC dynamics. Beyond 2030, as we see it, the non-OPEC producers will probably start reducing their rate of growth. And ultimately, the takeaway here is that the Middle East is still going to continue to be the most dominant player in the crude oil market worldwide. So, while we talk about the reshaping of the world order, we talk about changes, those are over probably the next couple of years, over the next 10 years, and then things start balancing back in favor of the Middle East. A quick overview on gas. It is a critical part of the overall industry. Gas has stayed in an oversupply mode for a long time. Demand has slowed down. Things have changed. However, it is our opinion that gas market is something that should recover as the world moves towards decarbonization. So that's really a trend to keep the eyes out for as we move ahead. I started my presentation by recognizing how the Middle East is the most dominant force or the most dominant region when it comes to the oil and gas industry worldwide. And hence, it's important to look at what it is, that's going to happen here. The first thing to consider is that the Middle East industry is going through the Middle East region, is going through a complete makeover themselves. There is a lot of economic diversification. You can see how contribution of non-oil GDP has been going up for most of the countries. They are making strategic investments in beyond crude and beyond gas. Public spending on infrastructure has gone up, but more on critical areas that are more long-serving and far-reaching from a society point of view. And there have been a lot of reforms that have been taking place. Israel relations are an interesting aspect. That people hadn't foreseen. Permanent residencies are coming in, and there's a flow of trying to just open up. All of which have a bearing on how the region shapes up in terms of oil and gas. From that point of view, I talked about this in the previous slide. It's interesting to keep an eye out on how the Middle East oil exporters are going to shift from an upstream perspective towards petro feedstock, towards petrochemicals and specialty chemicals. And that's going to completely reshape the demand zone here. You can expect to see a lot of partnerships coming up, rise of integrated complexes, more complex refining setups, and all of that just means that there's a redefining of demand. Again, if we take a look at it, in terms of countries that are investing, I think it's not surprising looking at, where the investments are going to come from. But I think what's really important to note and take away is really the theme of localization. There's a focus towards attaining more in-country value on every dollar spent on crude. And that's where it means that we can expect to see more manufacturing and assembly happening in the region. COVID has caused a lot of project delays, and that may cause a bit of a dent in the expenditure, dent in the sense of a shift. But most of these slated investments are definitely, expected to happen. But there is an underlying trend of moving towards OPEX and, focusing more on doing more with, the existing facilities. And I think that's something to, again, watch out for. Finally, to look at the emissions part, and that's again a critical theme that we've seen here. The companies here, the oil operating companies, both national and international, are under increasing pressure to manage the carbon footprint, and we can expect to see them take a look at technologies, take a look at suppliers where they're able to reach to attain reduced carbon emissions. So there's quite a bit of reshaping that's happening up here as well. One could then ask that, how does this relate? I mean, how do these changes relate to what's happening globally in terms of changes? And I'd like to just spend a few minutes talking about, what are the key global trends that have been impacting the oil and gas industry in the Middle East Africa region, and that's really critical. We've all heard about electric vehicles. We've all heard about electrification, and that's where what we can expect to see is an advent of electric vehicles here in the Middle East and Africa region. There is a turning point in terms of feasibility, in terms of value for money, in terms of applicability, and we're going to be expecting to see more penetration of electric vehicles, all of which impacts, of course, the requirement of fuel and hence crude. But at the same time, we're witnessing energy efficient engines and electrification, and that's going to have an impact on the Middle East industry as well for oil, because we're going to see more usage of technologies that result in lesser demand for oil per se. So that's an interesting trend one has to keep a lookout for. At the same time, it results in creation of demand for alternate equipment, for alternate industries. So it's an interesting development here. The other side is really to look at the renewable side of things, and how the renewables are panning out in the region. We've seen how the Middle East and Africa have, of course, gone in and looked at solar and wind. Hydrogen is something that's now starting up. I mean, interestingly, the world's largest hydrogen facility is coming up in Saudi Arabia, but they're going beyond the grid. They're going beyond looking at just the central part and getting into more decentralized distributed generation sources, of energy. And that's a trend that one has to keep a close eye out on. Storage, in our opinion, is going to witness a huge demand in the region, creating opportunities both for import as well as local manufacturing and assembly. And of course, there'll be an eye on maximizing local content while staying focused on energy management and emissions reduction, which is a theme that's going to just go across, throughout the industry itself. We see digitalization as a huge has a huge influence in the region. I mean, earlier we used to just talk about digital oil fields, but this is going way beyond. There's an underlying need to improve efficiency and achieve higher sustainability. And digitalization is a force that's going to contribute to all of that. We see the regional companies focusing on reducing their operational costs as well. And digitalization is being seen as a solution to do that. The companies here are looking at trying to defer capex, and I spoke about it earlier. Again, by incorporating digitalization, doing more with less, by enhancing the efficiency of assets, you're seeing a good recipe for being able to reduce the capex itself. And digitalization is going to assist these oil majors in achieving higher compliance and on the HSE side, which is a critical parameter for evaluation as the companies are exposing themselves to a wider range of stakeholders. The other side is really a change in business models. And I think we as Frost & Sullivan look at this quite extensively. And, it's quite interesting to see this happen in the oil and gas industry. There are changes happening. There are strategic investments being made in areas like recycling, in areas like storage, in going offshore. So, for example, going and investing in facilities outside of the region and trying to get captive access to clients for your crude. We're seeing investments happen in low carbon businesses, and that's just going to increase in the future. We're seeing the organizations focus on end-to-end solutions. Previously, it was just on getting into fuel retailing, for example. But now there's talks and focus on exploring around electricity, around EV charging. So we're seeing a new shape emerging here. And more interestingly, venture capital. The oil companies are going down the VC route. We've got Saudi Aramco having an arm, we've got BP, Shell, all of them trying to back startups. And the focus is on low carbon technologies, on renewables, mobility, digitalization. And we can expect them to bring all of these technologies into the Middle East region as well. So it's quite an interesting flow of things that's happening out there. With these changes, what I've tried to do in the last few minutes here is to try and give you a glimpse on how things have been changing, a few key trends to keep an eye out for. But if I was to try and leave some key messages with you here, these are now out here on my slide, and I'll talk a bit about them. In our region, in the Middle East and Africa, you can expect the oil and gas industry to really just reshape themselves. They will end up reallocating their capital towards deriving more value, to deriving more value per barrel of oil by creating more products. And that means going downstream, trying to focus on high returns. They will be moving towards value investing. They're doing that, but we can expect to see just an increased focus on that. So into looking at, value investing in assets across the world so that they can enhance their margins. We can see the oil and gas companies here revisiting their cost structures. And there will be a lot of focus on cost optimization strategies, which will pan across everything, across equipment, across digitalization, sustainability. All of those are going to have a bearing on this. We can expect them to redefine their partnerships across the entire supply value chain. And the focus is going to be on building resilience, on having long-term relationships, on having mutual growth together. And we can definitely expect all of them to go digital across the board, across every facet, right from customer relationships to managing their operations and delivering a very seamless, unified, infrastructure for their people, for their stakeholders. And that's something that will also help them improve their efficiency. So these are the 5 key points I would want you to take away in terms of what we can expect to see as evolutions in the Middle East and Africa oil and gas industry. That's it from me. I'll be open to questions, and thank you all for listening in. Good day.
So, good morning, good afternoon, good evening, wherever we reach you right now. My name is Michael Wiedemann, and I'm very happy to be with you here right now to give you an update on the energy sector within DPDHL. Speaking about the energy sector, I feel that the energy sector, the energy industry, is the most fundamental and most important industry of all industries right now, and I'm excited to be part of this industry. Without the energy sector, our world would be dark black. We would have no advancement when it comes to economy, no advancement when it comes to medical developments, no advancement when it comes to society as well as to education. But energy actually lights up our planet, and therefore me, myself, and the entire team of the DPDHL CSI energy sector is committed to powering our world together and to deliver excellence to the energy sector. And that's the theme that I want to take you through in today's session. You have all heard the State of the Union in 2020. 2020 is a year of significant disruption for the energy sector. You have seen the facts around an oil price crash that we have seen this year, which we haven't seen for the last 17 years. Oil prices down to $17 per barrel is something which we haven't seen for a long time. $20 a barrel actually we haven't seen for a long time. Now obviously this had all implications on activities within our industry, within our sector. We see projects being delayed, we're seeing projects reconsidered, we're seeing rig counts dropping by about 50% compared to last year. So definitely very significant disruption. We also see a change in energy sources. If you look back for the last 25 years, we have seen a relatively stable mix of energy sources. Now looking forward for the next 25 years, we see the opposite. We see a huge emergence of renewables and a relative decline of other energy sources, which definitely will bring challenges to the sector, challenges to the logistics industry, but also opportunities. And last but not least, and probably very important in the here and now, we are obviously all challenged by the situation with the coronavirus pandemic in which we live right now. We've seen a wave 1 with lockdowns across the globe. We're seeing wave 2s coming across the globe right now. I'm speaking here from Germany. We have just announced another lockdown for another 4 weeks yesterday evening, and likewise other countries in Europe like France and the Netherlands and Belgium. So definitely challenging times, not only for the energy industry, but also for the logistics industry. We have seen this year a situation where capacity was absolutely scarce on the air freight side as well as on the ocean freight side. Some of the capacity was redirected to urgent medical shipments, and also a decline in passenger capacity by about 80%, more than 80%, obviously drove capacity into scarcity. We have seen challenges probably that we have not imagined for the last couple of years. We have seen challenges in border crossings which we haven't had in many years. Like for example in Europe, border crossing is a non-issue normally. This year, March, April, May were challenges. And we have seen congested logistics infrastructures, partially driven also by a significant uprise in e-commerce orders in Q1. During the lockdowns in Europe, in the US, and other parts of the world, we have seen e-commerce rising. We have seen levels of e-commerce shipments that we normally would see at Christmas periods, which obviously congested the infrastructure. And I dare to say probably that we will continue to see those congestions. We will have a next peak period coming up in just a couple of of weeks in the Western world. And I'm pretty certain that also with the emergence and with the availability of vaccines across the world, we will see again a restriction and a shortage of air freight or ocean freight capacity and the infrastructure. So difficult times right now for energy as well as for logistics. But I would always say a crisis is also an opportunity that we can look into, and it's an opportunity taking us into a new normal. Actually, when I look into the COVID situation, I would break it down into three distinct parts. First was the lockdown period. The lockdown period was characterized and best described as crisis mode, doing things. It was about protecting your people, protecting our people, and making sure that your operations can continue working. It was about shipping PPE equipment across the world, shipping PPE equipment to the most remote areas in the world, specifically in our sector. Currently, we are what I would call the pre-new normal phase. We are not in a new normal yet. We are not anymore in the lockdown. Also, we are entering another one in some parts of the world, as I said. But we are in a pre-new normal phase. This phase for me is the opportunity to look into our status quo, into our value chains, into our supply chains. And hence I believe it is an opportunity to prepare ourselves for a new normal, which I would expect we will see in the second part of next year in 2021. So we have discussed with many customers within the energy sector, but also in other sectors, and a couple of themes emerged out of those discussions, themes which are relevant for the logistics industry and for supply chain practitioners. I have 10 themes here which I want to share with you, and believe me, I am able to count. You see 9 boxes, but actually I've coupled 2 points into 1 box. So 10 themes, some of them pretty obvious, others maybe not as obvious. So let me take you through them one by one. The first one, sourcing. Probably not necessarily as relevant for our industry and energy, but definitely relevant for a lot of the production industries. It is about making sure that you have diversity in your sourcing options. Given the fact that we had lockdowns, that we had congestions, it is utmost important to have options and possibilities when it comes to sourcing. Discussions of nearshoring versus farshoring were coming up over the last couple of months again. The second one, which I probably would combine warehouse networks as well as inventory optimization, is about thinking about your warehouse networks, your supply chain networks. Definitely during COVID, but also during the changes and the challenges that we see within the energy sector, demands have changed. Demands have decreased. Demands have shifted geographically. And it is the right moment right now to think about your warehouse networks, which obviously also have an implication of your inventories. Warehouse networks for me are warehouses that are directed towards distribution. So questions around, do you need to have a global hub parallel to regional distribution centers, or can you optimize this? Are your stock holding points still correct? But it's also on the inbound side, it's also on the MRO side. I had discussions with multiple customers around what is the best strategy when it comes to maintenance repair operations and the stock levels in maintenance repair operations. Very often actually the stock in our industry is not sitting in warehouses, but it's sitting in operations itself. So it's a relevant question to ask yourself right now, are there opportunities to optimize your stock levels, to optimize your warehousing points, to potentially consolidate warehouses, or to pull stock back so that you can leverage it more and take it out of your balance sheets. The third point, supply chain resilience. Actually, this topic came up some years ago when we had another crisis in the transportation industry, which was around the eruption of the volcano in Iceland, which basically drove a large part of the air freight industry and the air traffic overall to a halt. And customers asked themselves, how can I identify my exposure to risks within the supply chain? And we as DPDHL have looked into building a tool, a platform which we call Resilience 360, which helps you to map out your supply chain. It helps to map out your sourcing points. It looks into mapping out your operational points, your warehousing points, and your customers, and obviously all the connections of the nodes in between. And with intelligence in this network, you can assess then your exposure to risks within your operational network. So I think a relevant topic, and probably the situation with COVID brought this topic back to the surface of many of the supply chain practitioners. Cost and cash. I think cost definitely, as well as cash, was top of mind at the beginning of the year with all of the players in our industry. And topics came back onto the table which we haven't discussed for a long time. Topics which were around what is actually my core business in my industry. Is logistics, are all parts of logistics part of my core business, or are there opportunities to outsource parts of my logistics operation? The so-called LLPs, lead logistics partner concepts, or 4PLs, were topics which we frequently discuss and are still discussing. And I think it's a relevant discussion to think about how can I maintain the operation that I need to maintain with the reduced staffing that I have because I had to protect my cost base. So interesting discussions here. Outsourced warehouse operations, I think twofold here. One is, can I benefit from somebody who is an expert in warehouse operations and in this way also dispose of risk? Or even can I go into interesting financial constructs, like for example, sell and lease back in order to free up cash? And these are opportunities that one can discuss at times like this, where you really reevaluate the value drivers of your supply chain. Inventory optimization, as covered before, is part of warehouse network optimizations. But now let me dive into 3 different topics, which might be a little bit remote for the energy industry, but which I feel are absolutely relevant for our industry as well. The first one is about digital platforms and e-commerce. Only recently, I think it was a week ago or 2 weeks ago, I hosted a webinar on e-commerce together with our president for e-commerce within DPDHL. And we had a discussion about what are the opportunities that digitalization and e-commerce can bring to our industry. We talked about topics which are relatively obvious. For example, using e-commerce as a distribution channel. I think that's what we from our private life, our personal life know most. But it's obviously also applicable for our industry. For example, in the lubricants business. We have seen players who have web platforms, who have web shops. We have seen during lockdowns that, for example, the volume on those platforms surged by nearly 100%, and the volume stayed relatively high. So there is an obvious possibility of driving user adoption, of getting closer to a customer, and of extracting more value out of a supply chain. But distribution is not everything. I think e-commerce can also play a role when it comes to sourcing. B2B e-commerce is a topic which becomes more and more relevant nowadays. And I would argue probably it is 4 to 5 years late or delayed compared to B2C e-commerce, and will also drive value into our supply chains. So sourcing is an opportunity for e-commerce as well. E-commerce or digitalization also can be an operational enabler. We have, for example, as DPDHL founded a platform called Saludo, and some experts on Saludos will speak to you during the session as well. We have founded a platform called Saludo, which is a digital freight platform. It actually connects shippers and carriers, 30,000 shippers, 12,000 plus carriers. We are operational in 50 countries. And I believe it is a possibility of bringing transparency and bringing efficiency into this market. And obviously, for us in the energy sector, we are addressing key questions like HS&E and others to make sure that this platform is also relevant for our sector. And last but not least, maybe a little bit out of the box, e-commerce digitalization can be an entry point to a circular economy. I'm certain that with the current industrial environment, we have a lot of obsolescent stock distributed across the globe. We have projects being postponed, cancelled, and so on. One option, obviously, is to scrap the stock. The other option is to resell it and to leverage platforms. Other industries have led the path here already, so why shouldn't the energy industry also join up in this journey? So I think there are lots of opportunities when it comes to digitalization and e-commerce, and definitely a great opportunity for us in the supply chain practice to drive value into our supply chains. And next topic is around sustainability, decarbonization of supply chains. I would argue probably every international and national oil, or maybe nowadays even energy company, is discussing about decarbonization. And we as logistics practitioners have a large role to play here, actually. We have to play a role in 3 areas, in my opinion. The first one is around burning less. So these are typical optimization questions. We need to look into consolidation. Are we driving consolidation to the maximum possible? Do we have hidden LCL business somewhere which we could drive into FCL or leverage LCL platforms? Are we using the right modes for our distribution needs? Air, sea, multimodal, or even rail, which is on the upcoming right now. Do we have the right routes, right carriers, right network? And I touched on this one before, and when it came to warehouse points, which obviously drive a network as well. The second part is about burning cleaner. And I think here we from the transportation industry as well, our partners in the energy industry can join up forces. It is about coming up with alternative fuels, with cleaner transportation. We have, from a DPDHL standpoint, already emerged years back into electric transportation, e-mobility, and have equipped a large part of our fleet with electrical vehicles. But we are also in lively discussions right now with many of the players in the energy industry about sustainable air fuel, for example. So another area where we can play a role and drive decarbonization. The last one, in my opinion, is less obvious. The last one is around the shift in energy sources that we see in the industry, and you see here a statement from Siemens that in the Middle East, for example, by the year 2035, we expect a tripling of the platforms of the installed bases in the Middle East. This will drive logistical challenges, in my opinion. What will it drive? It will drive first the establishment of those new operations. You see here a picture of the typical scale of project business in the wind business. And it will require specialists in handling those cargoes. And I'm glad to share that we, our DGF forwarding business, our project business, has been awarded of Project Logistics Player of the Year just recently, so we can play a key role here. But the other part actually is, the other logistical challenge actually will come later on. The next challenge that will come is maintaining those bases. You see here a picture of the installed base in the US, just as an example, and you see how distributed those power generating units are. All of those units need to be maintained, and I think that is a challenge that we haven't yet brought to an optimal solution. This challenge actually reminds me a little bit of the challenges that we have seen with the emergence of distributed computing, server parks, or also the growth in escalators and elevators. Both speak about installed bases and how to maintain those installed bases optimally. And also here logistical models have emerged. And so, for example, we have set up within DPDHL our service logistics network, which is a true network consisting of stock holding points, consisting of secondary stock holding points to pull back inventories to a more central level, and access points on sites. I think there is a lot of value still in a supply chain which can be unlocked when looking into how to optimally manage maintenance and repair operations in the future in the emergence of renewable energy. So wrapping up now, what have we covered? We have covered, yes, we are in an environment with a changing energy landscape. We have seen energy prices, oil prices dropping, and we have seen at the same time an emergence of new energy sources. COVID is a topic which is here right now and will remain with us for the next coming months, and in my opinion is a facilitator of change. It will drive change within the supply chains, and I'm certain that we will find more value in our supply chains and supply chains come more to the forefront. I believe e-commerce and digital platforms will play a key role within the energy sector. Sustainability is here and is here to stay, and sustainability brings value to the economy, but it will also bring new challenges to us as supply chain practitioners. And renewable energy will give us challenges and opportunities when creating new values and extracting new values in the supply chains. Now, having said all that, there are obviously some basics which we also need to consider all the time. HS&E is at the utmost of importance. Compliance is important. Global presence, local content. And I think with all that, we are all together in one boat, powering our world together, and I'm happy to support the energy industry with our teams, and I thank you for your attention. Thank you very much.
Hello, everyone, and thank you for being with us today. We hope we are enjoying the virtual trade fair, and hope you also enjoyed this presentation on oil and gas sector. So thank you so much, Abai and Michael, for being here with us. Thank you for participating on this live Q&A. So let's get to it. So we have a question. The first question is addressed to Michael. So Michael, you have mentioned the e-commerce as an opportunity. Is this mainly for the international oil companies or also for the service companies?
Thank you. I think it's a good question. I mean, I feel it is relevant for both parts of the sector, but probably will come in different shapes and form. I mean, the international oil or international energy companies are probably closer to what you would traditionally call a consumer with some of their products, lubricants, for example, or other products which get closer to a customer, to consumer. So therefore, probably the traditional approaches of e-commerce would be more applicable, like, for example, using e-commerce as a sales channel, as an additional sales channel to the existing sales channels. But I believe also for the oilfield service companies, for example, there are opportunities. They're more in the classical B2B space. And I think one would need to be a little bit more creative and really take e-commerce at the broadest sense, which is not only on the selling part, but also on the procurement part, or also looking into how to streamline processes between two companies. What we've seen also in other industries, and yesterday we spoke about the automotive industry, for example, is that here B2B e-commerce probably did trail B2C e-commerce by, what was it, 3-4 years or so. So I would expect that also for the oilfield service companies, opportunities will come up more in a B2B model and probably a bit delayed. Relevant for both, but with different dimensions, in my opinion.
Thank you, Michael. Abai, any comments from you in the e-commerce opportunities?
Well, I mean, it's a good question. Look, we have seen, you talked about the service providers, and I can say that a fair number of oilfield equipment providers have been, trying to shift their catalogs, online. They're trying to get into the e-commerce mode themselves. We're also in the Middle East started seeing, the emergence of B2B e-marketplaces, especially, structured towards the industrial side of things, not just simplistic office related, supplies, but also around, industrial parts, and I think it's definitely a trend that's gonna accelerate moving forward here as, clients start looking for more options in a convenient manner, and yeah, so I think that will mature.
Great. In the meanwhile, so for our audience who is watching us right now, if you have any questions to any of the participants about the energy sector, about oil and gas, please feel free to type them into Slido, as you can see the chat box in your screen. So Abai, going further, what do you think are the digitalization opportunities in this sector?
Yeah, so that's something that's, again, an interesting trend which is going to accelerate in the post-COVID era. What we saw the oil and gas industry grapple with here was, issues relating to manpower, because out here, a lot of people deployed in the oil and gas companies are expats, and there were major mobilization and labor issues that the region witnessed. There was also a fair bit of let's say challenges relating to now justifying the capex and opex that these organizations had planned after we saw the economy nosedive globally. In this context, digitalization comes in terms of, with two advantages. One, reducing the dependency on labor, and two, also helping in increasing efficiency of existing assets and investment. So you can look at trying to defer capital expenditure, or try and look at, you can defer expenditure required to boost productivity, for example, by just investing in digitalization bringing in analytics and using that to streamline your operations better. So it's quite a conducive, let's say, perspective now, or conducive vision for digitalization moving forward in the post-COVID era.
Interesting. So, Michael, any comments from you on digitalization?
Yeah, I think, I mean, as Abhi said, I think we do see some more applications and more use cases nowadays in the area of digitalization, and sometimes it's really that basically a need generates an opportunity here, and Abhi mentioned before, and automation, for example. I mean, we've seen other industries already moving into automation, for example, in the warehouse space, with the help of drones, with the help of robotics in warehouses. But we also see it now expanding into the oil and gas industry, where you might not speak about a warehouse, but you would speak, for example, about a yard. And are there opportunities to use some of the digital technologies also in those environments? And I think it's an evolutionary development which only kickstarted in the last couple of months, probably, basically driven by the need. The other topic, obviously, visibility. Visibility, I believe, was always a key topic, but became over the past months, with also some challenges that we've seen within the supply chain, became a more relevant topic. So having visibility of incoming material, having visibility of stock, having visibility of inventories. And again, I'm pretty sure this will drive, wouldn't call it a digital revolution, but it will speed up the development on digital developments. And it all starts with data. Then once the data is available, it drives new processes, it drives analytics, and so on. I'm pretty sure that our industry as well will benefit from the current crisis that we have, which will drive digitalization forward.
Thank you.
Yeah.
So our next question, what do you see as the biggest logistical challenge and opportunity for the time being in the energy industry?
Did I pick it up?
Yeah, maybe you can start.
Challenge, I think generally, but it's more a market question. I'm pretty sure that the demand side on the energy market, on the oil market, is probably still a significant challenge for the coming months, which will impact activity levels, which will impact exploration. So I'm pretty sure that is a challenge, but it's not so much a logistical challenge, while there's some logistical parts to it, but it's probably more a market challenge. But what I would say probably on the logistical side, I'm pretty convinced, similar to what I mentioned in my presentation, I'm pretty much convinced that our transportation markets, air freight, ocean freight markets, road freight to a certain degree as well, will remain volatile over the coming months. And largely driven actually by supply, or an issue with supply on the capacity side. I'm pretty sure we will still see a continued reduction in air passenger traffic, which will take out air capacity out of the market. We will see continuous shifts from available capacity to the general market, shifting towards the healthcare market. I mentioned, and I think we are all looking forward to vaccinations. I mentioned vaccinations. I'm pretty sure that at the moment that we see vaccinations coming to the market, suddenly a draw on a constrained air freight market. So I'm pretty sure a logistical challenge for us will be volatility in the transportation markets. And I think the only key here is remaining agile, being very close to the risks in your supply chain and working closely with the partners who can help you with different modal opportunities to get your goods from A to B. On the opportunity side, again, as I mentioned before, for me, every challenge is an opportunity. I think for me, it's the opportunity for us as an industry right now to ask challenging questions and rethink some of our logistical approaches that we had in the past. I think nothing is worse than complacency and doing things because we have done in the past. So I think there's a stimulus right now to question ourselves. Why are we doing certain things in a certain ways. And I think it's good for the industry because it will challenge ourselves and we will come up with better and stronger logistical setups than what we had before this crisis.
Thank you, Michael. Abai, any inputs from you on opportunities and challenges?
Yeah, sure. I think Michael's covered some great points over there. But just maybe I could try and put a bit of a different angle to it. When you take a look at it from a logistics point of view, I think there are the challenges that the oil companies witnessed here was delays in delivery of equipment that impacts project operations as well as new project construction, right? New build projects and ongoing projects in terms of what they may require as routine replacements or consumables. And especially in oil field equipment, there's still a lot of imports that are still, that still the industry here relies on. And that was a huge challenge, getting all that equipment on time, and that caused a disruption. Now, if we marry that issue with the aspect around localization, on how companies here are pushing hard to add more value locally rather than just base everything on imports. If we marry these two trends together, our perspective is that there could be a case where, one, there'll be an increased thrust for storing things locally, making them available here locally before, in larger quantities to take care of a longer term demand. And when that would become commercially infeasible, we could expect people to see more assembly operations come up here and look at integrating components either manufactured locally or imported in. So, our perspective more on a long term is that, there'll be an increased thrust to localize production, even for oil and gas. And that would result in a different kind of need for, let's say, logistics support moving forward.
Thank you, Abai. Very interesting. So the hot topic of the moment, COVID. From your point of view, so the oil market in general in relation to COVID, so how do you have any predictions of what's going to happen there, or what is the future looking like for the industry after or post-COVID?
Yeah, well, okay, so I'll take a stab at it first. But look, I mean, I wish I could claim to be a pundit who can, predict exactly where oil is going to be in the long term. If you ask me more from, a year's perspective, here's the take. The world is in oversupply mode at the moment. There's land stocks of crude are at all-time highs already. They've been building up throughout this year and even before. That was one of the reasons you heard about crude going negative, just because there was no space to stock for some time. And, in that stage of oversupply and stocking, I think for anyone to expect crude to see a massive recovery is just not going to be happening. Oil is weird. It has a huge political, impact. Politically, things have an impact on oil as well. So, the US elections or ongoing issues worldwide may land up having temporary effects on crude with spikes. But on the long term, looking at alternate energy, looking at, energy efficiency movements, and even looking at how there is a move towards reducing the use of plastics. I would opine that crude oil prices are not going to go back to the all-time highs they enjoyed. Probably, the $40 to $60 band is where you could expect it to keep playing, depending on events.
Thank you, Abai. Michael, any comments from you?
No, I think, Abai, in my opinion, you have had absolutely the right points there. Also, when I look at the demand drivers for crude oil for our industry, I mentioned before the aviation industry. I think the latest forecast that I've seen, or predictions that I've seen, is that the aviation industry expects to be back to a pre-COVID level, so a 2019 level, in 3 to 4 years' time. And obviously, aviation is also a big contributor to oil consumption and general economic oil pull. So I'm with you. I think that we will see a plateauing of prices. I would not expect the peak oil prices that we have seen some years back. I also believe, and I think it comes even in combination with, I mean, it's not necessarily directly related to COVID, but it's related to the reactions of many nations on COVID. Like if I, for example, take the European market, a lot of COVID stimulus right now, monetary stimulus into the markets. So be it loans or be it grants to companies to overcome their production losses, were linked to a more cleaner operation, to a more sustainable operation. So I think even this will also drive the move towards renewable energy, will drive towards less waste in the industry. So I think this will also change our industry to a certain degree, not necessarily directly out of COVID, but through governmental actions that come out of the COVID situation. Yeah, and I guess in the short term, when we speak about COVID, I think the one thing that comes to my mind is obviously protecting our people and protecting the people who work in our industry, so in the energy industry. So very short term, I would say, ultimate focus still needs to remain that we protect our people and keep the operations going. And I think we still have here logistical and operational challenges for the next coming months because we are definitely not yet through the crisis.
Unfortunately.
No, unfortunately.
Yeah. All right. Unfortunately, our time is also coming to an end, but I would like to thank Michael and Abai for your insightful presentation. Thank you for this discussion and for answering the questions that we got from our audience. And just a reminder to everyone, take a look at our virtual trade fair. We have a booth on the energy sector, and you'll be able to download our white paper with the key trends in the Middle East and Africa in the oil and gas sector. So you can download this white paper study from the booth. And tomorrow we have a presentation on Saudi Arabia. So you can also access that through the virtual trade fair. There will be a link to the Zoom call tomorrow at 3 p.m. Dubai time. We will be connecting and talking about Saudi Arabia. So we really hope you are enjoying this event. And thank you so much for your participation. Thank you once again, Michael and Abai, and hopefully to see you soon.
Thank you. Thank you. Thank you to everybody.
Pleasure being here. Thank you.